Hello and welcome to Panther Financial Services. This is Pranav Patil. Today we will discuss why companies' ethics and principles are very important for an investor to understand. If you look at in the last month, there was news from Infosys founder Mr. Murthy, Narayan Murthy. He said that in the last 3 years he has not had a word with Nandan or Salil, CEO of Infosys. Nor they have dialed him, but he is happy the company is running good and he is happy with the dividends he is receiving in his bank account. He also said that even I did not dial them, they know that if something mess I see, that I will not keep a quiet, I'll raise my voice. What does it mean? As a founder, he is not care about the stock price, he is not care about what the people, how the people perceive him. What he wants, the principles and ethics should be monitored or the maintained in the company throughout the life. And this is one of the reason Infosys is one of India's top five companies in India. The reason we are discussing this point today, a 67 years bank, 67 years old bank, Credit Suisse, washed out from the market in less than 16 days. Can you imagine 167-year-old? What exactly happened? It is not, only restricted the entire issue for the 16 days, but the kind of environment created in the 16 days, those 16 days that led to, the washout of Credit Suisse from the market. If you look at the CNBC's international YouTube video, they have clearly stated in 2016, Credit Suisse sales employees sold close to $10 billion worth of bond to their ultra HNIs, and later on they were put into the junk. They did this activity because they were getting a good amount of commission on those bond from the issuers. You can check the detailed video is there on the CNBC International. This is not the one scenario or the one case. Then later on, the company's Credit Suisse was fined in Belgian regulators for helping a drug peddler. Then their employees being investigated for a corruption perspective for sanctioning the loans. Then they were also had charges on spying ex-employees. Then there was a the big chaos happened last year. If you can recollect, Archers, the big US short seller, goes bankrupt in the US. That person had a exposure in Credit Suisse close to $5 billion. So the reason I'm not pinpointing a one point, what we are trying to understand, there are always, chance to get out from the stock if you see the company is not, properly following the ethics and principle. Now, what is ethics and principle? Basically, when a company, decides, okay, we will not sell a particular kind of product. We will understand the product. If it is genuine, then only we'll sell it. Now we know that this product is not, not good product. The still I'm getting a commission of 5% by selling this product, and I have a certain ultra HNI client. They will not have a big hammer. Then still I go and I sell that product because I'll my targets will be achieved as a sales manager, also as a sales head. As a CEO, I'll get a good amount of bonus. This is where we lack as in company. If this kind of year happens, then the one should, decide to quit it. The principle is something like, if you decide a particular thing and if you don't follow it and you see that in the news, and then it doesn't make any sense. The principle are you should be help to the humanity, and if you are indirectly helping the drug peddler and the racket, then it is absolutely not, you're not following the principles. So this is there are a lot of cases happened, and still the bank, washed out in 16 days. The bank tried very level best. Let me tell you this also, before this incident in last month, The Credit Suisse top management bought, or top employees bought the shares of Credit Suisse from the market. That clearly indicates they were sure that Credit Suisse will not die. They had a faith on Credit Suisse, but still happened. Credit Suisse tried to save from this turmoil. They and how they tried to avoid this scenario, they got the loan of $54 billion from the Swiss regulators, but still they couldn't save it. They got the 10 billion bond buyback they did, but still it didn't help to save the share price. They tried, a lot of other things as well, but it didn't save. What exactly happened in the US, the SVB bank, we have made a video on that as well. After the collapse of that bank, there was a huge, the air was there in the across the market, that SVB collapsed. Later on, I think first Signature Bank collapsed, and then the news came for a First Republic. The environment was getting very bad. That's the reason US regulator came in the picture. 19 US bank put the deposit into First Republic Bank, and they tried to save the collapse of this bank. Then the air went to Europe, from US to Europe. If you look at the Europe, the major two banks were Credit Suisse and UBS. The already this air was there, the principle and ethics of this bank particularly, and that again, helped them to get a choke. But nobody believed that this could happen. Now, as an investor, if you look at the why the Credit Suisse is very important, Credit Suisse is the part of Financial Stability Board. There are total 29 banks part of this board, world's 29 board. If one of these 29 banks gets failed in the market, the impact happens on the global economy. So what does it mean? If they get collapsed, across world will bear the consequences of them. And to avoid that, the government of Swiss tried to broker this deal. They came in the picture to avoid the issues across the globe. So what they said, okay, UBS is also our bank, let's merge it, like SBI and HDFC merged it to avoid the chaos in the market. So they came into picture. They said, okay, close the deal, and they closed at a very rough price. The offer was given 60% discount to the closing price of previous day of this deal. That was way much lower than what the investor did. The Saudi bank in the last year invested another $1 billion into the shares of this bank, and they become largest shareholder in this bank, but still they could not save it. The entire point which I'm trying to make it, that 167-year bank goes out of the market in 16 days. What, how it could be possible? As an investor, how we can, save ourselves from this kind of things? Because if you look at the day for yesterday, again the news came from a US short seller that the block company, the Jack Dawson's company, is again created the mess. They have shown how the company is, running the business, how the mess is happening, and how they are fooling the people. So it is all against the ethics and principles, and how you can, check this kind of companies and you can save from yourself. It is very simple. If you see any kind of news, don't blindly trust on that news. See if it is hammering on the ethics and principle of the company. They are against what they say and what they do. Is there any difference? If you find it that if it is not ethically correct, then it is better to quit the shares at any point of time. So as an investor, it is very important. You invest in any company, but just remember that if you don't see ethics and principles are followed, quit it, that company, because you don't know when exactly the bubble will get burst. Hope you enjoyed today's discussion. If you have any doubts or anything, you can mention in the comment box as well. Thank you for your time. Have a great day. Thank you.